Hey, what's going on, everybody? It's Marcel Kalinovic, Butcher Wall Street here. Oh, look, all right, we got AMC. We got AMC customer support over here. That's fantastic. What's up, my friends? Reef Diaz, great to see all you guys. And ladies. Of course, never forget the ladies. Don't leave them out. We got the Global Financial Stability Report. Safeguarding financial stability amid high inflation and geopolitical risks. I think we got Jim Cramer in the house.
Sell.
What's going on, friends? John, Jay, Mark, Christopher, Lady Reef, Hilsey, Anna. Great to see all you boys and girls. So yeah, I was taking a look at this Global Financial Stability Report a few days ago, and then earlier, I think it was yesterday. Davey, I don't wear a hairpiece. I'm a real man. I was looking at a tweet here from McSqueezy, and he did a great job of outlining certain sections of this. Let's see, what is this, 126 page report. And then after taking a look at the put-call ratio being at 1.41, yeah, Jim Cramer's got to chime in here.
Don't buy. Don't buy.
Yeah. Smart money is using the S&P 500 rally to go short. I was looking at a tweet from Game of Trades, actually. Check this out. Smart money here refers to capital flows from experienced individuals, right? They've timed the market tops and are betting on a new downside that we're looking at here. So 1.41, anything above 1 is usually means that, well, does mean that there are more puts than calls. Anything underneath 1 would mean there are more calls than puts. This means that more people than not and institutions are shorting the market right now. It's a really good contrarian indicator, and it represents, more sophisticated, big money traders that are pretty good at timing the market. Before the dot-com bubble burst, the put-call ratio kept rising and reducing in waves with these natural spikes occurring near the market corrections. And there was the last record that we saw was just before the 2000 top. And then from there, the next one we saw was net long during the market bottom in 2002. Check that out. This was record short levels here in January of 2000 at the top of the dot-com bubble. And then people going net long during 2002. And then we saw the same thing in 2007. Check this out. Massively elevated short interest here through the top of the financial crisis. And then record lows. More people going towards net long than short here during the bottom. This is big money right here. Marcin asks, where are the "we're gonna be so fucking rich" mugs? My friend, I took the merch store offline, like, I don't know, almost a year ago at this point. I wasn't sure if there was much point in keeping the merch store. Yeah, it sells merch and stuff, but my profit margins were very low on that. That was just more for people to get in and buy some cool merch and have it for themselves as memorabilia. It was never really like a long-term thing for me. I'm not a professional YouTuber. I'm an entrepreneur. I'm a business owner. I'm an investor. So for me, that was not really something that I was going to do long-term. I might bring it back up since I keep getting questions about it. And I ran a poll on Twitter, and the majority of people, more than not, want it to come back. So I don't know. I kind of want to bring the merch store back, but at the same time, it's a headache that I don't really want to deal with. But I probably will, since there seems to be quite a bit of demand for it. But yeah, if you guys got questions, drop it in the chat. I'll answer what I can for you. But we saw the same thing here. before 2002, or 2022, what we saw here, the put call ratio at the end of 2021 was the highest we had seen since 1984. And then August of 2022, we saw a massive spike here. And now we have greatly eclipsed that so far. And before 2022, you know, the highest put call ratio was in 1984. You know, really signaling that decline in equities. And today we're seeing that once again, you know, a reversal of the ongoing rally is being called upon by big money. You know, the most odd thing about this is that what they call, you know, dumb money, you know, small money, I don't think they're really dumb at all. But they do have ways of getting swept up. Sometimes retail investors have ways of getting swept up along with the market. So right now, there's a lot of retail investors that think this is very bullish. And big money saying that, no, the market is very bearish right now. Yep, you got it. People aren't having it? No Jim Cramer soundboard for you guys? So yeah, the equity put call ratio is reaching levels that have been preceding market peaks. That means that while I'm not a financial advisor, this is not financial advice, the charts and the put call ratio is showing that we're very likely, or at least people are betting on the fact, smart money, big money is betting on the fact that the market's about to come down. So smart money bets on the downside and dumb money remains optimistic to the upside, and oftentimes they get swept away with it. And right now with the Fed pause, deflation starting to occur and steady earnings, it's really interesting what's about to happen, particularly with earnings week, this week being absolutely massive. We are looking at some massive, massive earnings this week. Let's see the economic events and earnings this week. We got consumer confidence data on Tuesday, new home sales on Tuesday, 2023 first quarter GDP data on Tuesday, March PCE inflation data on Friday, and then mega cap tech report earnings all week long. A lot of the mega caps are going to be reporting earnings this week, Monday through Friday, the week of April 24th. So we've got 15% of the S&P 500 companies reporting earnings. I don't think that's going to bode very well for the market. But yeah, you know what? We've got a poll open right now. I've got it pinned up to the top. I need everybody to go on there and vote. We need to get this to 2,000 votes. So right now it's at 1,798 votes. I don't know if it's stuck or if it's broken or what, but we got 2 days left here. And we need to get this thing to at least 2,000 votes. So I need all you guys to jump on Twitter, click that link, jump on Twitter real quick, and drop your vote. If you haven't already, I need you guys to do that for me. Take a look. Switch it up. This, as Jim Cramer would say, you know, this is an absolute train wreck. This market is not in for a good time. And the NBFI sector encompasses a wide range of institutions, some of which typically provide liquidity services to markets and institutions, such as trading firms or broker-dealers. And liquidity stress in this NBFI sector can spill over to the broader financial sector, as could be seen during recent stress episodes, such as the March 2020 Dash for Cash, or an association with liability-driven investment funds in the United Kingdom, says this report from the Global Financial Stability, IMF, the Global Financial Stability Report from the IMF, the International Monetary Fund. And it says, to be sure, some NBFIs can also be important providers of liquidity at times of stress. For example, insurance companies and pension funds act countercyclically, buying securities after large price declines. But right now we're seeing some major liquidity mismatches, according to the report. It says some NBFIs may hold relatively illiquid assets, but allow investors to redeem shares on a daily basis, and at a price that does not reflect the liquidation value of the assets. Liquidity mismatches make funds vulnerable to financial runs because investors have an incentive to redeem ahead of others, which can contribute to volatility in asset markets and threaten financial stability. Let's see, it says, according to the Global Financial Stability Report, they're saying that over the past year, the liquidity of open-end funds holdings had deteriorated to levels last seen at the onset of the COVID-19 pandemic, implying high vulnerabilities of asset markets as a result of liquidity mismatches. This leads to, what does it lead to? Liquidity spirals. In combination with financial leverage, a lack of market liquidity can lead to so-called liquidity spirals, where a decline in asset prices leads to a deterioration of funding liquidity, which then spills back to further impair market liquidity. Ladies and gentlemen, we are talking financial runs, fire sales of big-time blue-chip assets.
The House of Pain.
Such liquidity spirals are evident in the UK pension fund stress episode, where amid already relatively poor liquidity in the UK gilt markets, that's bond markets, margin calls as a result of large losses in derivative positions caused pension funds to sell bonds in a manner that contributed to further illiquidity in that market.
All aboard!
Get on the fucking train wreck. MC, thanks for the super chat, my friend. You're too kind. Let's see. Real quick before I take your questions, you guys, I got your chat up here on the side. But what does this mean? Crowded trades, right? Common exposures to assets. Here we could talk about the bond market, blue chip stocks, MMAT stocks, etc. Common exposure to assets in combination with correlated liquidity shocks can amplify these stress events. For example, redemptions can force investment funds to sell assets, literally financial runs, which depresses prices and can lead to further sales of these depressed assets and other assets, bonds and stocks, T-bills, you name it, which depresses prices and can lead to further sales by other market participants with similar portfolio holdings.
Don't buy, don't buy.
You heard that? That's heads are rolling, ladies and gentlemen. This will amplify the initial shock. Over the past 2 years, the portfolios of investment funds have become more similar compared with previous years, according to some measures. And it says that this raises the threat of correlated liquidity shocks amongst funds. All right? We're not talking about the bulls and the bears here. We're talking about the hogs, the greedy fucks. Let's do that one more time. That's fun. That's excellent. Yeah, yours truly. Thank you, Paul, Tully. Appreciate you guys and girls. Kershaw, hello, everybody. Hi, Whopper. It's great to see you. Make sure you guys hit that link up at the top and vote on this one. I need you guys to vote ASAP. These are the risks for non-bank financial intermediary sector. Okay, so in case you're not familiar with NBFIs, it stands for non-bank financial intermediaries. You know, we're talking about pensions, insurance companies, etc. Okay, so asset level vulnerability as a result of illiquidity of funds holdings, different asset types. Look what happened in 2020. Massive spike all around. Emerging markets, small caps, high yield sovereign bonds, corporate bonds, and high yield corporate bonds all around the world. We saw a little bit of that back here. Let's take a look at the other chart that I just showed you guys. Saw a little bit of that. Oh, hang on, wrong one. In the August-September 2022 spike that we saw here, that's the same time frame in which we are seeing these spikes here on the second level. This was 2020 during the market crash. This was 2022. And we didn't even have a crash yet, technically. We should have had several, but the plunge protection team continues to spend taxpayer dollars via the Economic Stability Fund to short the VIX and prop up the S&P 500. I am absolutely positive that this has been happening over and over again. Now, see what happened here in 2020? Look at Germany, Japan, UK, and the United States. The United States is in yellow. These are median bid-ask spreads of government bonds during the crash of 2020. The bid-ask spread was absolutely massive. Liquidity mismatches in open-end funds have been increasing again, just like they did in August of 2022, and just like they did even more in 2020 during the COVID-19 crisis. Okay, so this backdrop of deteriorating market liquidity and common holdings across funds portfolios is rising. You can see the similarity of global fixed income fund portfolios here by asset classes in green, increasing, and then by issuer right scale is slightly decreasing right now and starting to trend upwards again. This is not great for what we're seeing in the economy. Short interest built up before the 2007 top, and then they went net long after the 08 crash. We're seeing very, very similar things now throughout the market, and it's being seen all over the place. It's being seen in vulnerability risks, bid-ask spreads. They are rising. Look at the bid-ask spread here from 2022, from 2021 through today. Higher lows, higher highs. So these rapidly tightening lending standards that we're seeing right now and small businesses means that small businesses are struggling to get credits, and that signals that a recession is already occurring. So the S&P 500 currently is disregarding elevated risks of economic recession, and that's quite clear. So what we're going to continue to see is the market continue to be propped up by these asset managers, by the plunge protection team for as long as physically possible. I mean, eventually they will leave blue chip stockholders holding the bag. And they're going to get fucking shocked, dude. No pun intended, but they're going to get fucking shocked. What's up, Boston? Tiffany, it's great to see all you guys. Tully. Pantheon, yeah, I missed my guy Pantheon, but he's pretty busy right now. All right, we got Captain Awesome. Hang on, let's say, let me mute my phone real quick. Forgot to do that. There we go. And look at what Dave Lauer found. Dave Lauer just found this enforcement action from 2012, he says, that a subsidiary of Charles Schwab was caught naked shorting and using options contracts to sham reset transactions. And this is why you see stocks like AMC go on the Reg Show threshold securities list after failing to deliver for 13 consecutive days, and be on there for around 24 to 28 days, and then fall off the list and come back on 2 weeks later after 13 more days, because broker dealers and companies like this Charles Schwab subsidiary are causing sham resets to occur via these transactions. They use options contracts, and this results in continuous failures to deliver. Okay? He even says it himself. In case someone tells you it can't happen, it's happening. So let's take a quick peek here. What does it say? This case involves a complex short selling scheme to profit by circumventing the delivery requirements of Regulation Show of the Exchange Act, also known as Reg Show. From at least October 08 to March of 2010, Options Express Inc., a wholly owned subsidiary of Charles Schwab, failed to satisfy its closeout obligations under various rules of Reg Show by repeatedly engaging in a series of sham transactions known as resets, designed to give the appearance of having purchased shares to close out an open failed to deliver position, while in fact not doing so. Period. This is absolute criminality at its best. That continues to say, the sham resets were accomplished by Options Express facilitating its customers buying shares and simultaneously selling deep in the money call options that were essentially the economic equivalent of selling shares short. Ladies and gentlemen, this is what we call married and divorced puts. Okay? These are married puts and married calls. That's what we're looking at right here. This is all we've been talking about since 2021, since this channel began. If you already knew this, please drop a like. If you're just learning this for the first time, feel free to subscribe because I guarantee you'll learn more. The purchase of shares created the illusion that the firm had satisfied their closeout obligation. However, the shares were ostensibly purchased in the reset transactions, were never actually delivered to the purchasers because on the same day the shares were purchased, the deep in the money calls were exercised, thereby effectively reselling those fucking shares. These paired reset transactions were not bona fide purchases because their purpose was to perpetuate an open short position while giving the illusion of satisfying the delivery and closeout requirements of Reg Show. These sham transactions thus allowed Options Express, the Charles Schwab subsidiary, and its customers to engage in what amounts to a stock kiting scheme that deprived true stock purchasers of the benefits of ownership. These sham reset transactions also impacted the market for the issuers. For example, the customers who engaged in the above described activity accounted for an average of 47.9% of the daily trading volume in Sears, to be exact. You guys remember Sears Roebuck? The now defunct and bankrupt Sears Roebuck? That's what short sellers do to companies. That's why it's important to align ourselves with companies that don't do this kind of, that do not follow the status quo of the criminality that's occurring amongst broker-dealers, market makers, hedge funds, family offices, you name it, prime brokers. They all fucking do this. Well, let's not say all of them, but the vast majority of them do these illegal criminal acts, and they get a slap on the wrist. So in case you're wondering, that's why I'm working on a broker-dealer by the name of LitXchange. You can find us at LitXchange LLC on Twitter, or you can go to litexchange.app, litxchange.app. There is no E in it, LITXCHANGE.app. And you can sign up for the beta tester program if you'd like. I think there's a few slots available left. And I'm really looking for everybody to take this poll. I need all of you guys to click the link here that I have pinned up above and take the poll. It ends in 2 days, but I need this done now. So thank you very much. Appreciate you. AMC Customer Support, Black Widow, thank you guys. Tiffany, Yvonne, I appreciate you guys. Thank you for trying. You guys are the best. The Argos Read says, get your money out of ISDA banks ASAP. All right. Nate says, you, Biggs, and Tony are three guys I listen to over at AMC Ape. Appreciate you for never changing up on us. Thanks, Nate. I'd be honest with you. If I decided that I didn't think that AMC was a good investment, I'd be the first one to say, hey, guys, I'm not in AMC anymore. I'm going to sell my position. But that's not the fucking case. I absolutely love it. I've increased my position of AMC and Ape, as well as some other meme stocks. And I have, in fact, purchased even more long-dated call contracts. Ron Johnson, thanks for trying to vote, my friend. Shining Bright says, they're already moving to keep anyone with good liquidity from prospering during the coming price correction. Melhana asks, where have you been, brother? You know, I'm working on LitXchange, guys. Creating a broker-dealer is so capital intensive and so time intensive that the majority of people could do not fathom the realities of what's behind something like that. It takes so much time and effort and money, and that it is absolutely ridiculous. And so I do need support. I need you guys to help, help follow, help subscribe, sign up for the beta, vote on this, for example, that we have listed up here, because this all matters right now in what we're doing and in what we're going to do. And we're trying really hard to come out with a broker-dealer that is completely different than anything you have ever seen for the benefit of the retail investor. Okay, because I'm tired of orders getting sent to the OTC, and I'm tired of orders being run through dark pools. I'm tired of orders going through payment for order flow, through a market maker that is going out there to fetch them via a dark pool just to come back and front run all your trades. I'm tired of retail losing millions of dollars, tens of millions of dollars consistently every single year just because they're too cheap to pay $5 or $6 or $7 a trade. When in reality, what you're paying now is much fucking more than that. I'm tired of Apex Clearing coming out and pulling the rug from investors like they did in January 28th of 2021. Remember when they came out and said that Apex would like to inform you that the below listed stocks should be liquidation only on your systems, whether proprietary or through a third party. They would include both equities and all option series, most importantly the January 29th, 2021 expiration, because they were aware that if retail investors had exercised these call contracts on GameStop, AMC, and COS, it would have completely destroyed the short sellers. It would have destroyed the broker dealers and destroyed the clearing houses. And retail had every right to do so. But instead, people freaked out and they sold their positions. And therefore, it gave them a chance to continue shorting the stocks. Over here, from the U.S. House Committee on Financial Services report, they said that Apex personnel were concerned that if they were not able to meet such a prospective intraday margin call within an hour, the application of existing NSCC rules could have resulted in the cessation of Apex's clearing activities by the NSCC. In other words, were the intraday margin call to materialize and were Apex unable to meet it, Apex may have been restricted from continuing its clearing operations, which in turn could have prevented customers of each of the introducing brokers that Apex clears for from executing trades. Apex personnel reached out to the firm's primary shareholder, Peak 6 Investments, LLC. This is very important. And Peak 6 Investments, LLC, ultimately infused additional capital into Apex in the amount of $100 million on January 29th and another $50 million on February 2nd, 2021. However, Apex's capital raising activities became less pressing and so on. And so they got a get out of jail free card, and retail took the bait. People freaked out. They had never seen this before. They didn't know what to do. And they absolutely sold out. This is what they did.
Sell, sell, sell. Sell,
This
sell,
is
sell.
what they did. People got freaked the fuck out, and the markets came crashing down. At least the meme stock markets. This is something that happened to many stocks. And then this caused major reverberations throughout the stock market. And over the coming days, as Apex filled all these positions for which they were being margin called, that did not materialize. They did end up delivering these shares, but they had to go out and run up the prices on hundreds of stocks, like Ocugen Inc., OCGN, went up 5,259% on the one-year chart on February 8th, 2021, because of exactly what we just discussed. They spent that $150 million to buy back shares that they needed to buy back on OCGN, Bionanogenomics, iBio, Vaxart, and so on. I'm not going to list them all. But look at Tilray. It was up 1,000%. You know, look at ARO, 328%. That's my peacock, by the way. Hope you guys like it. Foresight Autonomous, 1,079% run. Absolutely massive moves that occurred throughout the market. See, and then we'll look at the dates, February 8th, 9th, 10th, 9th, 11th, 9th, because all of this happened one after the next. Sundial, 1,671%. Naked Brand, 1,845. Zyomedica, 3,122. Have I made my fucking point? I think I have. Some of these clearinghouses and some of these broker dealers absolutely do not care for the retail investor, and they will do whatever they can to maintain their stranglehold over the retail investor. Look at Robinhood. The Securities Exchange Commission fined Robinhood $65 million because it costs retail $34.1 million more than paying commissions. If you had paid commissions, you would have saved $34.1 million collectively just from Robinhood. You hear that, ladies and gentlemen? So on December 17th, 2020, the Securities Exchange Commission charged Robinhood for repeated misstatements that failed to disclose their receipt of payments from trading firms for routing customers' orders to them. This is payment for order flow, okay? And with failing to satisfy its duty to seek the best reasonably available terms to execute customer orders. This means you're not getting the best possible price. So you're losing money on payment for order flow, and then you're losing money on their execution. Because best execution for Robinhood is all about speed, not about price. So you get it fast, but you pay a shittier price. That's a fucking strike, ladies and gentlemen. So as you can see, it says here in the SEC's order that the SEC's order finds one of Robinhood's selling points to customers was that the trading was commission-free, but due in large part to its unusually high payment for order flow rates, Robinhood customers' orders were executed at prices that were inferior to other brokers' prices. Despite this, Robinhood falsely claimed in a website FAQ between October and June of 18 through 19 that its execution quality matched or beat that of its competitors. And I continue. The order finds that Robinhood provided inferior fucking trade prices that in aggregate deprived customers of $34,100,000. Over $34 million fucking dollars, even after taking into account the savings from not paying a commission. Bravo, Robinhood. Bravo. That's the way it's done in America, right? God, I love this stupid Jim Cramer soundboard. I might have to abuse it a little bit. So this is nothing new. It's been happening since the 90s and the 2000s when Bernie Madoff created payment for order flow. All of these guys are using and abusing payment for order flow in order to make as much money possible off of the retail investors. So anyways, let's move on, ladies and gentlemen. Let's see what else we got. We've got a couple good questions. Someone tell, is this judge and this whole thing going to potentially knock all this to hell and shut it down, says Scotty D. Honestly, Scotty D, I'm not really concerned about it at all. The judge is... All right. So, the lawsuit. It was scheduled for the 27th of April, but we don't have to wait that long because of the agreements that were made. It was that date is basically out the window. The judge received some more documentation, and now the date has been pulled up to the 25th of April. So, on Tuesday, we are going to once again be going to court, at least AMC and these defendants, and the judge might possibly issue a dismissal, or the judge might let them proceed with the settlement, in which case AMC would be receiving shares. Those shares that they would be receiving from the settlement would be coming from the short sellers. There's a reason that this is being delayed so much. And it's not because it benefits the shorts to continue with the conversion to the reverse split. They are absolutely scared. They could not be more concerned. How can I emphasize this? Short sellers will most likely have to pay for the shares in the settlement that go out to retail investors. That means shorts are going to lose a lot of money. And if that happens, it's very likely that they're having to purchase those shares is going to cause the stock price to run up. Now they're fucking themselves in the ass, and they're fucking each other in the ass. This is an adult channel, so if you're watching this with kids, hey, not my problem. All right? So we're going to be seeing this happen very, very quickly, in my opinion. Oh, you guys got GG for mod? Where's Gorilla Grodd? I'll mod him. I just don't see him over here in the chat. There he is. My friend, Gorilla Grodd. It's not letting me add you as a mod right now. I'll have to try a little bit later. Dana Young asks, but nothing will be done until 60 days from her decision, correct? That may or may not be the case. It may take 60 days. It may not. So if it does take 60 days from her decision, then, well, you've got around 2 months to decide to do whatever you want to do, whether you think you want. It doesn't matter what I think. What matters is what you want to do. I'm not here to provide financial advice or tell people to buy or sell or hold. All I'm saying is that I am extremely bullish on this happening. The conversion and the reverse split, in my opinion, will most likely happen very quickly. The judge will look at the documentation and say, well, 87.5% of voters voted for the amendments to do the conversion, the reverse split, and the dilution. Let's go ahead and let that happen. That's what I believe is going to occur. So shorts will have to pay the settlement shares for the settlement as well, causing gamma pressure on the stock, causing delta hedging by broker dealers, causing probably fear of missing out buying, and a vicious cycle that occurs there. And then when I see significant numbers and my account looks like a fucking cell phone number, I am going to exercise a portion of my shares. I'm going to exercise a significant portion of my call contracts and force them to give me hundreds of thousands of shares. They're going to have to go out on the open market, buy them, and deliver them to me. And I'm going to shove the gamma right up their fucking ass. So that's where I stand. It's bye-bye, baby. I'm getting people asking about BBBY. They're filing for Chapter 11. Okay, BBBY, not AMC. AMC is straight. BBBY is filing for Chapter 11, which is a reconstruction of their reconfiguration of their debts. So they're going to go all to their creditors and try to settle with them for a portion of their debt, or they're going to try to roll it into, say they're going to take 100 loans and they're going to try to roll it into 10 small payments, 10 large loans, so that they have a significant restructuring of their debt in order to try to buy down some of that BBBY stock. They're not fully out of the ball game yet, although it definitely doesn't look good for BBBY, I'll say that much. Candy could you explain why the shorts would be the ones to pay the compensation shares on the settlements? Yes, I'd be happy to, Candy. Shorts would have to pay it because it would be like a dividend. And shorts always have to pay dividends. So AMC cannot currently issue dividends, but they will be able to in the future. Once they've paid off some of their debts to remove those covenants that prevent them from doing so. But when there's a settlement like this, it would be, per my understanding, it is a dividend, and the dividends need to be paid by the shorts. So that would be millions and millions of shares. Oliver says, well, I was also giving that narrative with my January 2022 145 calls that expired. Yeah, my friend, that's buying calls. When you buy calls, you have the possibility of them expiring. So nobody should be buying call contracts unless they know what they're fucking doing, first of all. And if they do, they should be willing to buy, sell, exercise, or watch those expire. And if you're not willing to stomach any of the three, then you probably shouldn't be playing with options. Because anytime you buy call contracts, if they don't act like shares, theta is a bitch. Theta kills. And theta, for those that don't know, means time. And with a long time that passes, that money goes out of those call contracts, go out of the money, stay out of the money, and then expire on the expiration date. Therefore, they can no longer be exercised or sold. That equals losses. MULN may be a trap, asks Robert Richards. You know what, Robert? MULN is finally coming out with some orders. They got an order for 1,000 electric vehicles. They're starting to, roll out production and things like that. They've got a long way to go. But at 8 to 11 cents, I really like MULN, personally. I really like MULN. Looks like Investor Place is harping against BBBY, MULN, and MMAT. They must know some big moves are coming, says Cody Burgess. I noticed that as well. Investor Place is trying to turn people off to MMAT, MULN, and BBBY. And that kind of is suspect, right? If the Chapter 11 restructuring of debt through the bankruptcy causes BBBY to get a better financial position, that could potentially cause a short squeeze. MULN at 8 to 11 cents, in my opinion, is extremely undervalued, even though I don't suspect something's going to happen on that, like something long term wouldn't happen on that stock for a long time to the positive side. That doesn't mean that I could be, I could be completely wrong and there might be a fucking short squeeze at any moment. I like MULN, especially at 8 to 11 cents. I think it's a fucking steal, and I'll probably be picking some up soon. MMAT, I love MMAT. I think it's a fantastic company, and it's extremely undervalued. I think MMAT in the next 2 to 3 years is a $50 stock. Currently in the pennies, in the very, very cheap right now. MMAT is the future, says Gorilla Grodd, and I completely agree with you. Metamaterials has significant number of patents. They've got hundreds and hundreds of patents on futuristic materials and technologies, and they're getting contracts all over the world with big name companies, some of the biggest companies in the world, and I think with the United States government in the near term future. I think they've already got some. That's something you need to look into, though. Don't take my word for it, because there are whispers and rumors going around that they're currently working with the U.S. government on some contractual obligations to work together. Let's see. Frank says, AMC will only deliver free shares on legal shares. Shorts must deliver the free shares to legal shorts, synthetics, and naked shorts. Checkmate. I like that, Frank. You're a smart guy. Let's see. Jefferson Steelflex. Hey, boss. Bought some options for the first time. I bought a $5 call options on AMC expiring in January 28th. So I'm assuming you're probably saying January 28th of 2024, but you didn't specify. So how'd I do? Kind of have bare bones knowledge on the Greeks, but I'm learning more. Well, my friend, I can't really give you financial advice. So I can't really specify if I think that's a great idea or a bad idea, because if January 28th or whatever day you said of 2024 rolls around and the price hasn't gone up significantly, you could lose every penny. But I mean, they're $5 call options, so they were probably pretty expensive. We're already hovering in that range right now for AMC, around $4.99. And if the conversion reverse split theoretically were to pass, APE gets rolled in AMC and AMC starts diluting. Well, I can't say that in January of 2021, AMC started running into crazy numbers, most likely because that's when AMC was selling shares. Because every time they do, the hedge funds and the shorts have to go out and buy those shares because retail's not fucking selling theirs. Same thing happened in May and June of 2021 when we saw the all-time highs on AMC of $77, $78. AMC was selling shares, and the stock price hit all-time highs so far of $78 a share, while AMC was diluting. Every time over the last several years, both those times that AMC has sold shares of AMC on the open market, the price skyrockets. And I believe it's because the shorts have to fucking buy them. And then that causes retail to flow in more with FOMO, broker-dealers to have to delta hedge, and then gamma to start ramping up as the implied volatility starts going crazy. People that are playing options start to sell their contracts, bring in big dough, and then exercise some contracts. And then the exercising of contracts forces broker-dealers to have to go out and buy more shares and deliver those shares to the customer. And then delta hedge further as the price goes up further. And then gamma squeezes some more. Therefore, it is a cyclical thing that occurs. So I can't tell you if it's going to happen or when it's going to happen. That's something that you have to decide, and be aware of the fact that theta, the time, all right, that's what the Greek stands for in the call contracts, as it nears closer to January, if the price doesn't go up above 5 and higher and so on, that it could plateau and start to come down. So really be careful. I will tell you that the last time that I was in AMC, well, I've been in AMC this whole time, but I will tell you that the last time I had AMC call contracts that ran hard in June of 2021, I was buying the $40 strike price when AMC was at $10 or $11. And when the day came, those contracts that I was buying for 21 cents, 22 cents a piece, so that's, for those of you that don't know, that's like $20, $22. When AMC saw that $78 price range, those contracts were worth between $6,000 and $7,000 each. So effectively, I turned the $22 into $7,000 almost per contract that I held. And a lot of people did as well. So that's why I'm not worried about having spent $50,000 on January 2023 call contracts. Some people may or may not have been here for that. But I had $50,000 worth of January 2023 call contracts. I'm looking for billions with an S. And they expired. And I'm fine with that. What did I do? I went out and I bought 1,000 more for January of 2024. So I've got about 1,000 AMC and AMC1 call contracts. And for those of you that are unaware, AMC1 delivers 100 shares of AMC and 100 shares of APE upon exercise. So I have 200 shares worth of call contracts. Sorry, well, way more than that. 200 shares worth per call contract of AMC1 that I own. And then 100 shares worth of AMC per call contract of AMC that I own. And those expire in January of 2024. And if January rolls around and those expire worthless, I'll probably go out and spend another $50,000 on January 2025 call contracts. But I don't really think I'm going to have to fucking do that. I don't, my friend. So some people seem to be confused because they don't seem to understand that the word hedge can mean anything. A hedge, for me, was not in buying call contracts and shares. A hedge of buying shares against my call contracts is not saying that the share price can't go down. It's hedging against the theta decay, the time that I would be losing by those call contracts going out of the money. Therefore, for me, since I'm so confident in what I'm doing and am able to hold long term, like really long term, I have no problem buying shares of AMC to hedge against the theta on my call contracts. You know, so it's a win-win for me, in my opinion. You guys are too kind. Thank you for the super chats. I truly appreciate all you guys. You don't have to super chat me, but I definitely appreciate y'all. That's for sure. Let's see. Where would I leave off here in the chat? Sorry, I went off on a little rant, but I love contracts. Jefferson Steel Flex, good luck to you on that, my friend. He said, I heard from markets with May that fractional options are a bitch to deal with. There's no such thing as fractional options. I don't know what that means. Let's see. Irishman says, do you have any idea when LitXchange will be open for share buying? Irishman, currently LitXchange is in the application and approvals process for the broker-dealer licensure through FINRA. This process takes several months. Okay, so I can't say if we'll be done this month or next month or the following or whatever, because I would be lying if I gave you an exact date. And I'm never going to lie to you guys. So I will tell you that as soon as I can give you more information, I'd be happy to. Because I'm at the point where I'm ready to look for a new broker again. Some of you may know I just moved around, I don't know, like 16, 17,000 shares of AMC of APE that I had from one broker. From out of IBKR, I moved them over to Webull. I've also got shares and contracts in Fidelity and Schwab and some other brokers that will remain nameless for now. Okay, but the point is, people are like, why'd you say move them to Webull? Webull uses payment for order flow. Yeah, but I'm not buying shares anymore. So who cares if Webull holds my shares? Because I'm not buying anymore on that particular account. Although I did buy more contracts on that account because I want to exercise them and shove them up Webull's ass. But here's one thing. Webull is switching over to a new omnibus agreement. And because of the new omnibus agreement, they're going to be limiting my insurance, the SIPC insurance, on that account to $500,000. What does this mean? This means I got to find another broker to move my shares to. So I've got Fidelity, I've got Schwab, I've got Webull, and a couple others. And I've got to find another broker in which to move these 17,000 shares of AMC and APE. And I intend to do that this week. Why? Again, because the omnibus agreement limits me to a maximum of $500,000 in insurance. Therefore, I have to pull those shares out of Webull. So I will find another broker that has more significant insurances to move my shares to. I can't wait to get LitXchange up and running so I can move my shares to my own fucking brokerage if MOAS hasn't occurred by then. And if it has, well, great. Then I'll move the shares I keep after MOAS to LitXchange and move my assets to LitXchange so that I can trade on my own fucking brokerage. Because I'm tired of Schwab's subsidiaries and others just like them, committing sham resets. I'm tired of Robinhood, like these guys, running my orders through payment for order flow to market makers who then let them trade on the OTC and dark pools. I'm tired of my money not having the proper price discovery and the stocks that I'm buying and selling because these orders are being run through dark pools and over-the-counter trades. I'm tired of getting taken advantage of as a retail investor, and that's why I'm creating LitXchange. So I hope you guys can support that. I hope that it sounds like something where you'd want to get into, because we're not just doing this to create another broker-dealer. There's 266,000 broker-dealers, per my understanding, in the world right now that fall under the SEC's umbrella. And we don't want to be just another broker-dealer. We're going to be something like you've never seen before. The platform, the business model, we're going to shake up the financial industry. And sometimes that does make me fear for my safety. And that's why I've taken a lot of security and safety precautions in order to protect myself, my family, my friends, my businesses. So please support LitXchange. Follow at LitXchange LLC. Go to litexchange.app, litexchange.app, in order to sign up for the beta and get yourself on the email list so we can send you updates once we're able to do so. So thanks, Irishman, for asking those good questions. Tiffany asks, what happens to AMC call contracts after the merge of AMC and APE? Well, only the Options Clearing Corporation can say for sure. Okay, but they'll most likely just be adjusted just like they were in the past. When APE was issued, AMC created not AMC themselves, but the OCC and the market makers created AMC1 call contracts. So now you've got AMC and adjusted AMC options called AMC1. And when it gets rolled, AMC gets converted and revert back into when APE gets converted back into AMC, then something will have to be done with the AMC adjusted options, AMC1. And what that will be, I can't exactly tell you because there's several ways in which that could occur. But there'll still be adjusted options, and they'll be readjusted probably once that happens. So I continue to buy AMC contracts. I continue to buy AMC1 contracts for the time being, and I feel very, very comfortable in doing so. Lucretia asks, what do you think about the new currencies they're trying to move to? Well, I'm guessing you're probably talking about BRICS countries and every country except for the United States at this point. I'm not surprised. I've expected this to happen for a long time. Silver and gold, that's where it's really at. And you know what? You guys bring me to a great point. You know what I got here? I got another silver delivery. Let's crack this baby open, huh? Let's see, where's my knife? Here we go. Let's crack open this silver and see what she looks like, right? Because speaking of money, the US dollar is not going to cut it. The US dollar is not going to cut it. So let's crack open this silver and see what we got. All right. Oh, it's pretty heavy. Oh, fuck yeah. That's fantastic. Just got a shipment of silver bars in the mail. I love the way that it's packaged. This order is I buy from multiple different exchanges, metals exchanges. I believe this one is from buygoldandsilvercoins.com, BGASC. But let's open it up and find out. Damn, it's really, really well packaged. But yeah, we've got some more silver bars. These are smaller denomination silver bars. Like you guys have seen me before with the kilos and with coins and other things like that. The kilo bars are 32.151 ounces per bar. And these bars are 5-ounce bars. Check this out. Oh, man. Diaz, what a nice super chat, my friend. Let me just say thank you, Diaz. You're a moderator in here and in the think tank and the Discord. You're too kind, my friend. Please don't super chat me that much money. You're too kind. I really appreciate you, my friend, but that's too generous. And then Grandpa Barney, thank you, my friend, as well. Also extremely generous. Truly appreciate you guys. It says, good afternoon, boss and my fam. I hope all is well. Be strong and happy. Much love from Maui. Grandpa Barney, enjoy your fucking vacation, brother. You're amazing. You're absolutely amazing. Riptide Redemption says, quick shout out to all the cool people here. You know who you are. Thanks for the stream, boss. Thank you, my friend. You're also too kind. You guys are crazy. Thank you. MC as well for the super chat. Appreciate you guys. Let's take a look. Here we have the 5-ounce silver bars. Looks like this one's from Silvertown Mint. Silvertown Mint. Let's crack this babies open. We got a bag full of 5-ounce bars right here, right now. Let's fucking go. This is real money right here. Oh, my little one's calling. So you see there's a bunch of bars in there. Let's just let's open up a couple of them and see what they really look like. Check this out. Oh, she's crying out there. I feel bad for her. I'm going to have to go end this stream soon. But before I do, let's take a peek at this. I got marker on me. I was doing some gardening earlier today. Writing things on the plant tags. Check that out. That's a 5 troy ounce, 0.999 fine silver from Silvertown Mint. Damn, she's pissed. She wants in. Take a look at the back of the bar. These things look really sharp. I am impressed with the quality. They're not the matte finish. These are the full polished finish. And they're very, very nice, as you can see here. So that's the 5-ounce bar from Silvertown Mint. Pretty sure I got them on bjsc.com, buygoldensilvercoins.com. I'm not sponsored. I'm not affiliated. I just tell you guys where I buy some of my stuff. You know, don't do what I do. Do what you want to do for yourself. Do what's best for yourself. So yeah, these are really fucking nice. I want to crack it open, but it's so perfectly sealed. Look at that. It's so well sealed that I also don't want to destroy that. So very cool piece. I really like the designs that they've got on there. And these are the first 5-ounce bars that I've actually purchased. I have not previously purchased 5-ounce bars. Oh, in case the IRS is watching, I only have like 5 of these 5-ounce bars and 1 kilo bar. That's it. So, and they're not kept in my home either. You know? So I'm gonna sell them tomorrow. So yeah, that's it, man. I'm really, really stoked about these. And you know what sucks about them being in this package? Oh, you can still hear it. You can still hear it. That's the sound of real money right there, ladies and gentlemen. That's real money. Who needs the fake shit? Who needs the paper? I bet I can get a lot further with this than I could with Chinese yuan or with the US dollar if I wanted to buy something. Because they could then take this and convert it into any currency in the world. Any currency in the world will be glad to have this. Silver and gold bars are the absolute king. And you know what? If you guys want me to bring on the CEO of not one, but 2 different silver and gold related exchanges, drop a yes in the comments. So let me see. I'm not going to bring on one CEO, but I'm going to bring on 2 chief executive officers or owners of silver and gold related products on this channel. If you want, just drop a yes in the chat right now and let me know if you want me to do that. I've previously had Dr. Marco Metzler, the founder of Serious Gold Trading, on our channel before, and he's creating a gold-backed cryptocurrency which you can redeem for physical gold. So if you buy the cryptocurrency and you want physical delivery, you can actually redeem it and then pick it up in several locations around the world. So keep dropping it. Let me see. I see a couple yeses. If you guys really want this, let me see everybody. Drop it in the chat right now and drop a like if you can for the channel, to be shared with other people, not for myself. My ego doesn't give a shit if you got 1 yes, 1 like, or 100. But drop it in there so that other people see this channel, this information. We got a couple: Silk, Peter Woods, Gummy, Tully, Melhana, Marianne. Okay, I got a few yeses in there. Keep it coming, guys. If you really want me to drop a couple videos or a couple live streams here in the next few days with 2 different founders or CEOs of silver and gold back related companies and exchanges, drop a yes in the channel chat right now, and I will do that. So if you want to see that, feel free to subscribe. I've got some really exciting shit planned for you guys, and some really intelligent people, much more intelligent than I am, that can really break this down for you and explain what makes these so fucking special. Because they truly are something that are magnificent, in my opinion. Damn, I love that sound. Can't do that with a fucking dollar. Let's go. This is the house of pleasure, like Jim Cramer says.
House of pleasure.
What a fucking chump, that guy. Holy shit. All right, cool. Damon, Larry Garcia, Fahad, Scott. I see a lot of you saying yes. Fabulous. Thank you guys for your time. Thanks for being here with me today. I think we're going to do that. Let's go ahead and get some of these other CEOs on the channel. We've had Dr. Marco Metzler. You know, we have had, Dr. Diane Garrett of Highcroft Mining Corporation on the channel before as well. And let's get some more CEOs on here and have some really in-depth discussions about economics, precious metals, the stock market, and so on, because I think these are really important things. Financial education is greatly lacking in this country and around the world because the top 0.1% don't want you to know the things that you really should know. And that saddens me, and it makes me angry, and I want to do everything I can to try to change that for people as soon as possible. So if you're interested and you want to know more, go to litexchange.app, and you can feel free to sign up for the beta. Just drop your email address right there. You know, it's not a solicitation to buy, sell, or hold any securities or any products of any kind. We will never sell or give away your email address or any personal information. We will never contact you to ask you for money or donations or anything of the sort. It is strictly for updates to LitXchange launch dates and information on the upcoming beta testing. So thank you guys, everybody. I appreciate you, ladies and gentlemen. Thank you for posting in the chat. I wish you all peace and wealth. Have a great day, y'all. Enjoy the rest of your Sunday night. If you're watching this on Monday, have a great week. Things are about to get absolutely nutters in the markets. Mark these words, ladies and gentlemen. Let me know how we're looking in the next couple of days, all right? Because I'll be here probably laughing and saying, just don't fucking dance. Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
give me the fucking money. Get the goddamn
money printer out. Great. Bounty letter. We're gonna be so fucking rich. Get the goddamn money printer out.
Just want to say thanks again to all you think tankers, all you fellow retail investors out there. Stay strong.